Welcome to another episode of Money in the Bank with Frank. Today we've got Corey on with us. I'm very excited to have somebody to talk to that's a small business owner that can tell me his testimony of what he actually does for a living. So before we introduce him, why don't we go ahead and do our disclaimers. Welcome to the show, Corey. How you doing?
And I'm making it. We've already done a podcast. Before we even started the podcast.
So I was listening to. I couldn't sleep last night. I just couldn't sleep, and so I stick the earbud in my ear, and I just lay down there and I let somebody play. And this one guy said, "Gosh, we've been recording for an hour and a half and I forgot to hit the record button. So we're doing this all again." I was like, oh my God, it can happen. You know how it can happen, right?
Oh man, I hate it when it happens. Or one camera was on and the other wasn't.
Yeah.
It's like, we got that one shot. So that's why we got a nice studio though.
Yeah. It's a great studio. I wish people could see how great it is. So, thanks.
Thanks, Ryan.
Thanks, Ryan. So, Corey, tell me a little bit about yourself. I know that you've got your own podcast. Please tell people about it. Tell them what you do, and then let's chat about small business ownership.
Yeah, Roughneck Real Estate YouTube channel, Roughneck Real Estate on Facebook. That's really it. Podcast. We talk about a lot of different things. We're in 2001. I started working in the oil field. Worked in the oil field till 2015. So however many years that is. Got laid off. Had a little bit of money set back, didn't understand money, never would invest, tried to save, buy dumb stuff that you didn't need. Had no financial advice in my life, no rich uncle, nobody to get financial advice from. But when I got laid off, a friend of mine, his dad had passed away and his mom had that inherited IRA, and he was sitting there and he was trying to trade stocks, not trade stocks, but he was trying to find, what are they, dividend?
Oh, yeah, dividend-paying stocks.
Dividend-paying stocks.
Actually going to give her some kind of income.
Yeah, and so he's sitting there with like $700,000 and he's trying to figure out, he's doing the math. He's looking at her life. He's like, her mom's now 90,
How are we going to make it?
How are we going to make it the next 30 years
on
dividend-paying stocks with $700,000? And so he had discovered real estate and, cash flow in real estate. And he was like, if I could get some rental properties, and he's managing this for her. And he's like, if I can get some rental properties, I think that would be the best route. And that's as much, he had done a year's worth of research on this. So he's listening to podcasts, he's reading the books, he's doing all this. I get laid off from the oil field. I had a 6-month-old daughter. She's 9 now. So I guess that's one way to measure it. So anyways, 6-month-old daughter, and I was looking at going to Kazakhstan and all these different places that I didn't know anything about, kind of in that time period, there's a lot of terrorism. ISIS was big at that point in time. So everything that you research that was overseas, it's 40-hour flights, this and that. I'm like, oh my God, this just looks
big whip.
It just looked terrible. And then on the other side of that is you got a bunch of travel days, so you work 28 days, then you have 2 days of travel on each side. I mean, you're just gone, and the money wasn't that great. I mean, I think they were paying like $1,800 or $1,900 a day, which will sound like a lot of money. But
isn't it crazy whenever you're single versus when you're once you're single versus when you're married? It's like, that's a great day if I have no one that's responsible for me or
Well, and but I chased day rates when I was in the oil field. I was total money driven. If somebody was paying $100 a day more, I was going to work for them. And when I started looking at the overseas stuff, the taxes get a little complicated. That's one. Everything was just a little bit different, and I was looking at it, and to be quite honest, I was worried about my safety more than anything, because while I was researching Kazakhstan, I realized it's like -30 there. I was like, whoa, I don't want to do that. You know what I mean? I'm thinking I'm going to a desert. I just hear Stan, I'm like, Pakistan. You know what I mean? I'm thinking Middle East.
Those mountains.
And then I realized Kazakhstan is like -30, and then I start looking in the laws and how if somebody gets injured or dies, we do a dangerous job in the oil field, you know, you can be criminally charged in another country. And so I'm looking at all the liability, and that's why whenever I say, you know, $1,900 a day and a lot of money, it's like, what are you risking for it? If you're risking prison in another country, because somebody dies on your watch, you know what I mean?
Yeah.
Would you take the deal? So
that's risk management right there. Yeah. See, there's risk management decisions that everyone makes in no matter what industry you're in, right? Because
every day.
There's just only a certain number of working hours during the week, and only a certain amount of time life gives you.
Right.
Right. We don't know what that number is, and so you have to do that balance. You got to figure out, like, am I trying to front load this thing and save early, or am I just going to wing it, take what life gives me until something happens, a straw that breaks the camel's back. You lose your job. You've got a 6-month-old child, and you've got to pivot.
Well, I'd already done the math on my life. I was going to make $12 million. That's what my lifetime earnings were going to be without inflation, without ever getting a raise. I was going to make $12 million. That was going to be enough. I was going to spend it all. It was going to be fine. You know what I mean?
Yeah.
That was it. How's that
working out for you right now?
Well,
as far as did any of that plan go?
No, it didn't go. I could have went back into the oil field. And I won't even call it a problem.
Yeah.
The decision pivoted when I had a kid. When I was in the oil field and I was out in the field, I'm not faulting anybody. Blue collar men that leave their families, I do it. I did it. I will do it. I'm doing it now. I'm not faulting any of it. You have to do that. That's part of the process. But at that moment in time, I wasn't in a position where I could for a bunch of personal reasons. So it was like I had, you know what I mean, this thing that, you know, I didn't anticipate being a problem for me. And I'm talking about the child. So you know, that was the first obstacle. It really wasn't getting laid off. Getting laid off happens all the time in the oil field. It was the other issues in the personal life that were.
So then as you know, humans, we adapt.
Adapt.
And you pivoted, and then your buddy had already done the research on something, right?
When he asked me to come to a meetup. So he asked me to come to a meetup, go to a meetup, and you know, realize that there's people out there that will loan you money on real estate for just the value of the asset. Opens up on, and I'm thinking this is all great, whatever. It doesn't matter to me. I'll do this. I'll help you out. I have no problem doing that. It'll buy me the time that I need to get this personal situation in order. And then when a job calls, I'll go back to work, and that'll be it. And so that was the plan. And that's why when you were like, hey, we're going to talk about LLC formation and all that, you're going to laugh. This is crazy. So we walk out of that meeting. The next week we bought 3 houses, 2 in his name, 1 in my name. There was no LLC. He just took our cash and like didn't know how to evaluate house, didn't understand. He understood rent and ROI and expenses and, you know, depreciation. He understood all that. I knew what none of this meant. I just knew that a buddy of mine had bought a house and sold it for $70,000, and I was buying this one for $12,000. And if all else failed, I'd move in it. I'd sell my place and move in it, and that was it. That was my underwriting. That was like, man, this is a nice enough house. I get the dead cats out of here. It's move-in ready. You know what I mean? And that was it. That was every bit of analysis it did. So we bought that first house for $12,000, put $10,000 in it, sold it for $60,000 owner finance. Crazy deal. Got $25,000 down. So y'all just did the math. That's $22,000 in the property. We get $25,000 down. So we pick up a little bit of money at closing. And then, this is the crazy part, we're making $215 a month on that mortgage.
Right.
And I'm like, well, what am I going to do with $215? You know what I mean? But what was my ROI on that, Frank?
It's good because you've still got the future value money. You've got the interest rate. You get your money coming in.
But how much money do I have in the deal? I put 22 in it. I got 25 down on it. So what's my ROI?
So you're flat, and you just own the property. You're just collecting that. You're just collecting that check.
Infinite. Yep. And I remember how bad I felt when I did that. When we did that first deal and got it across the finish line, I was like, we did terrible on that. And my business partner told me at that time. He said, no, we didn't. He goes, we have $0 in a deal that's going to pay us $215 a month for the next 30 years. You just won. You know what I mean? Like that. I'm like, but $200. What can I do with $200? Well, you can't do much with $200, but if you get 100 of those, you know what I mean? That's a different equation.
Yep.
So anyways, yeah,
that's cash flow. You bought cash flow. You literally we take this money, we put it into a can, we shake the can around, and then what comes out the bottom? Right?
Cash flow.
Yeah, and it doesn't matter if it's a lawn mowing business, if it's a real estate deal, if it's private equity, hard asset, soft asset, anything. It's all the same dynamics. And
it is.
So what I wanted to talk about in the first part is just getting started. Like, you were successful despite yourself in the beginning, but eventually it catches up to you. You start learning the things that you need to do because the government will come and tell you, right? It's like taxes.
Yeah, but he knew, my business partner knew all that.
Yeah.
So that was that biggest blessing. He still does it. He trained all of our bookkeepers.
Yep.
He still does everything with the CPAs. We've got, I don't know how many different entities, 10, 12 different entities, flowing through each other, complicated tax returns.
Yeah.
He does it all. I'm not good at that.
Yeah.
That's not my strong set. My strong set was walking into that 3-bed, 1-bath, $12,000 slab foundation home with a good roof and going, oh yeah, I'll scoop those dead cats out. I'll throw some flooring and paint in here. It's a different product.
Yeah.
That's my skill set.
Yeah.
My skill set is, you're
handy.
I'm handy, but I also understand the money side of the business well enough that I can go to a farmer or a rancher that saves $1 million, like literally just has $1 million sitting in the bank, and I can explain to them, hey, here's how you can be protected, loaning us that money at 12% interest only. Here's your protections. Here's your best case and worst case scenario if you want to go do that deal. Here's why real estate's a good investment. I understand it inside and out now. At the time, though, I was just somebody that was sitting on a couch that could get in a truck and go check on a contractor. And I'm good at that. Like in the oil field, that's all I did was run contractors. So, I mean, real estate's the same. It just don't go as fast.
So tell me about so you started off capital allocation. Your buddy had cash, a little bit of cash, put the money down. Self-financing. How did you actually did you go to a community bank?
No.
Not
this time.
Yeah.
So we paid cash for everything. In my mind, I'm like, I had a $30,000 a month hole in my life. That's how much I was making in the oil field. So I was like, I'm going to replace this $30,000 a month. I can do that with a flip. So if I do a flip a month, that's my 30. Okay. Along the way, we'll buy whatever we buy, and the rental deal, we'll do the rentals as they come. But didn't really want to own a rent house. I didn't. And that was what he was aiming for, but we kind of weren't in sync on that yet. We didn't understand it yet either. Yeah. So we started trying to flip houses, and I never will forget, we bought this one in Midlothian, bought it for $27,000. No, we bought it for $20,000. Turned around and sold it for 80 something. I mean,
doing nothing.
And I was like, why? We just need to do that every time. but then here's the crazy thing about business. We didn't come back to that for 4 years.
Yeah.
For 4 years, we still tried to put granite and carpet and make it and do it. And it's slow and it's tedious and everything. And you learn all that the hard way. But soon after we did those 3, we realized that we needed LLC, the risk side of it, everything else. So we set up an LLC. We go to our first community bank loan. You'll crack up at this. So we go to our first community bank loan, and they're like, we can do the loan, but this guy's got bad credit. That was me. And I was like, what does that mean? They're like, well, you can't be on the LLC. We can't do the loan if you're on it. And I was like, okay, well, take me off the LLC. And so we took me off the LLC because I had bad credit. Yeah. And I've never, you know what I mean? Like I'm now basically just an employee of it. I don't have anything in writing. So you're talking about risk mitigation. It's like I don't have anything in writing on that. You know what I mean? Like I'm not really even a partner of that because of my credit. My credit held me back at that moment. We've built this whole thing out. You know what I mean? And I'm vice president, and I'm this and I'm that, but I've never fixed my credit, so I've never got to participate. And
why don't we work on that offline? Why don't we work on that offline?
Frank, bad credit. Now I have no credit.
Yeah, but here's the problem. I can't live with that.
Okay.
I'm gonna have to close that loop.
It's okay.
Now that I know about it, we gotta fix it.
But so we start that original LLC, right?
Yeah,
and we don't know anything. We didn't consult a guy like you. You help with this sort of thing, don't you?
Yeah, I've actually been doing a little bit of it on the back end. I'm just doing the capital allocator. I understand it. We've done 2 deals down in Austin where we're getting it up to the part where we plat it, and then get the commitments for the water meters, and then we basically have agreements with different contractors and builders that will come in and just buy it from us, right? Because they don't land bank. So I've been doing it a little bit the past couple of years, but just real basic. I have a very limited involvement. I just happen to be, lucky enough to have some friends that are doing that full time. And I know that they're making a ton more money on the back end by doing the financing than we are. We do the equity, the upfront, and then like as it gets done, we try to hold it at least 12 months so that we have the long-term capital gain.
Right.
And then we walk away with a little bit of it, a little heads up, but they, we know they're making the money on the back end. But that's fine. They kill it, they eat it.
Well,
they're out there knocking on the door, talking to the ranchers saying, "Hey, you want to sell
that land over there?
Back 80?"
Yeah, no, that's what we do. That's what we do every day. So when we're in this deal, right? And so we start buying properties, and some of them we can't sell them. We're buying them for $10,000-$12,000, and we can't sell them for $15,000 just to get our money back out of them. But people are trying to rent them from us. And so that first winter, we had a handful of those. We bought for like $10,000, and we're renting them for $800 a month. What's that ROI?
Yeah, you're going to be great. You're going to catch up in no time.
But it all feels like a loss, right? It feels like I'm losing because in my mind I want to buy it, resell it, and so we run out of money. We run out of money, and we get, we're just like, hey, we the velocity of our own money slowed down. It's not flipping over. It's parked all in real estate. And so I asked my partner about that first loan, and so we go to the bank, and the bank cashes us out $100,000 over what we paid for the properties. And I was like, okay, so what's the tax liability on that $100,000?
I guess it's a long-term capital gain, depending on what they bought, they bought it all from.
When you borrow the money out, you don't pay any tax on it.
Oh, wait a second. So you actually just did a cash out refi for all of the properties in one group?
For all the properties in one group. Wow. And got 100,000 more than we had in them without asking. We didn't know what we were doing.
Gotcha.
We just went to the bank and said, we want to borrow our money back out of this. Yeah, no problem. Ordered the appraisals, come back, and they're like, here's what we're going to loan you. And I was like, that can't be right.
Yeah.
How does that work?
Yeah.
You know what I mean? What went into that? And why don't we just go do that?
So why don't we think about that for a moment? So you just fell into something that the very wealthy have been doing for years. Fell
into it, ass backwards. Yeah. And then said, at that moment in time,
this can't be right.
I was like, well, let's just go do that. Let's just go do that. That seems way better than this other stuff we've been doing. So what if we just go do that?
Yeah.
And so in 1 year we bought 250 doors. And basically the bank carried all the risk.
Yeah.
And then you hit that next wall, which is now your income statement matters way, way more. And it's like, oh, well, we're borrowing money, but are we making money? Right. You know what I mean?
Yeah.
It's like, so now you got to go back to flipping to get the income up.
Right.
To be able to stay lendable. So it becomes this toe touch dance of, you know what I mean? Like, okay, we got to go make money to stay lendable. Even though we got a ton of money, we're making money because we're buying low, putting together a portfolio, leveraging it to 60, 70%, okay? Keeping it rented out, and then doing the next deal. So in the process, we're self-managing, and we end up with a little property management company with employees. Yeah. Which we were talking about LLCs versus S corps and everything else. We had to take our original LLC, and we had to start an S corp underneath it, because I guess
because you have a management company,
W-2 employees.
Yeah.
So that was kind of our
shareholders,
first
the whole deal. Yeah.
branch off. You know what I mean? Where it's like, okay, now we've getting some corporate structure here.
Yep.
And so we have that S corp, and it now has 20 employees. Payroll, insurance. I don't think we have a retirement plan. Maybe we talk to you.
We should talk about that.
See, you know what I mean?
So, are you working through like how are you funding the payroll? Is it just cash flow, or do you borrow money from the bank and then pay them back as time goes on?
The payroll. So we did that for a while. So our people talk about it. I'm like, dude, basically all that debt we took on, all that equity we were pulling out at the front side, our limited knowledge about what equity meant. So all you're doing when you're taking equity out of a property is borrowing from future cash flow. That's it. So anybody that says you're doing anything any different is lying to you.
So I want people to note right now that this one pretends not to know anything. He just doesn't know the vocabulary, but he knows everything. So when I first met you, when we were over at Texas Stadium, we were sitting at that table and just kind of chatting, and you had some ideas that at the time and still now I'm not talking about, because I can't talk about unregistered securities like that. But ultimately, the thing that I was fascinated was like, he knows more than you know more than you think. Like everything that you're talking about is an advanced way of thinking about finance.
Right.
You just didn't know that there's actually definitions for it and how it works.
But I'm just not in that space.
Yeah. So basically, if you think about what's happening or what you used to do when you said you were borrowing from, you're borrowing for future cash flows, right?
Yes.
Yeah. So that's the same problem that we're going to start seeing with all of these other bigger commercial properties, because money cost nothing to borrow at the time, and that's just talking about REITs and real estate. But now, if you factor that back into the bigger companies, like any bigger company that has bloated employees and they've been borrowing because the money was free and then waiting for their cash flow to come in to redo that. But at a 7% rate, like all of a sudden the economics don't work. And that's when these zombie companies are going to implode, because they're
going to have problems.
Yeah. And so this is what you're talking about. What you're talking about is the market potentially going down sooner than later, right? Which we all want. Well, when I said we all want, I'm positioned for it myself, right?
A lot of people
Meanwhile, if you ask my clients, we're down 40% for the year because we didn't do 40% for the year. That's why I'm saying if you believe math, then we should have a correction.
Should have a correction.
But if you look at all the fear of missing out money and all the people that for the past 20 years didn't have interest payments and didn't, whatever money they had in their savings account, it was like 10 basis points. They didn't care about interest. Now, people that have a bunch of money in their savings account, it means something. I just pulled out, one of my clients, I've been begging him for the past several years, take it out of the bank, let's put it into treasuries, let's just ladder it. I won't charge you a penny. It's driving me nuts. So we pulled over multiple millions of dollars, and it means something now,
Right.
It's a lot, a lot. And he was like, why did I have all this in the bank? And people are finally starting, it's like, ding, why do I have all this money in the bank? And so the banks that are getting hit the hardest are the people that are loaning you money. The small business owners, or the small banks, community banks. Now,
you probably can't go into it, but was he in a big bank or a regional bank?
He was actually in a combination. He was in a couple of big banks, but one regional bank.
Was he fully insured, FDIC?
So there, if you work with, hopefully if you have somebody that we had protocols in place to make sure that their money markets were insured across a multiple variety of banks, even if the money was in the one bank.
Well, the reason why I asked that is I see, it's kind of weird how this little financial deal's playing out, because banks start failing at the beginning. That's kind of weird. You know what I mean? That was a little, I don't think anybody had that on their bingo card.
Because the rates are,
the rates, but they were also like, I don't understand.
And they also had fortress balance sheets. Since 2007, they've been saving a lot of money and having money sitting in cash just in case.
Well, but
the only negative is that some of these guys used the longer dated treasuries and had those, or the 30-year mortgages from the people that actually were and still are paying their payments.
Yes.
Right? They're still getting cash flows.
They got cash flow.
It's just that the asset value now reflects unprofitable.
Right.
Even though they're collecting cash, they're collecting.
But those banks that failed, the what's
Silicon Valley Bank and First Republic,
So they didn't properly hedge. I don't understand banking, but that's loose term.
One of them
okay,
for sure.
So and then they have a run, and runs take banks out. Washington Mutual. There's a great book out there called The Lost Bank about Washington Mutual. And it's phenomenal.
WAMU, the first one started
the first one that started all.
Them and Countrywide.
But they were a sacrificial lamb to get the stimulus pushed through. The FDIC knew they're not going to get stimmy unless somebody's got to go. Washington Mutual had just borrowed right before the Fed took them over and they sold them to Chase for $1 billion. They had just borrowed like $50 billion or something. They had plenty of liquidity. They were fine. They were bleeding a little bit of money, but they were going to be fine. Yeah. But they sacrificed them. According to the book, The Lost Bank, I don't know, I wasn't there. But anyways, that situation, they did that, and then they got the stimulus, the original stimulus passed. I don't remember what it was called. Do you remember what it was?
TARP.
TARP, whatever it was. They got it passed. So the banks failing at the beginning of this is kind of interesting because I'm not in stocks, I'm not in anything, but that if there's a run on the stock market, you know what I mean, it can get out of hand pretty quick. You saw it during COVID. Yeah, I mean, it just people move to cash and then they sit there. Now with the banks not even safe for cash, right? It's kind of middle America's thoughts on it. Like, banks are going under. It's in the back of their head. So if you're a non-sophisticated, not even an investor, you know, a conservative human, a saver, right? Savers are getting punished because now they're in the back of their mind, they're like, hey, I can't even, my money's not safe in the bank. I got to spread it out over these accounts. I got to do this. I got to do that. You know, where's my money safe at? Do you see that in the marketplace? Are people calling you and saying, hey, where's my money safe? Where can I take it that's not a bank?
Yeah, they did that. That's why so many people are in treasuries. I mean, that's why I got over $30 million like a couple of weeks ago to put in treasuries, pulled it out of the bank. Because here's the thing, right? If you take a look at your local bank, if you're lucky enough to be in that percentage of the population that has a huge nest egg in cash sitting in the bank, just sitting in cash, or CDs, right? Because everyone wants to be in a CD because they're safe, right? What backs those CDs?
The bank.
Treasuries.
The treasuries and the FDIC.
Yeah, it's like the banks borrowed short, right? And then they lend at long rates, and that's how they make their money in between. But if your 1-year treasury is paying more than that CD, the 1-year CD, why would you go to a CD that's locked in when you could buy a treasury that's at a higher rate and is liquid tomorrow with no penalty?
Right.
And that's the problem you're going to see with all these banks, and that is happening, right? The only thing is that they do have a lot of facilities. The Federal Reserve makes a lot of different things available to these banks and these financial institutions, and the other financial institutions will come in there and grab up those assets. Like, it's still my contention that First Republic Bank did not need to fail, and that it was like the biggest windfall for Chase, who took him over.
Yes.
Right.
Well, that's always the case, I think, in these bank failures.
Yeah. So for in my, by the way, I banked at First Republic Bank. I loved First Republic Bank. They were a great bank. They were a relationship-oriented bank, amazing bank. I actually did, have to pull some money out to make sure that I was secure, that my assets were secure. But I did leave money in there because I wanted them to survive.
So our property management's trust account, we had a client that we managed properties for, and he didn't have a second bank account. And he called us up and he's like, hey, I got money in First Republic. I want to get it out. Can I send it to y'all's trust account? You know what I mean? Until I get this other bank account open. And we're like, yeah, So he sent it to us. So it sat in our trust account. and then we when he got his new bank account open, we wired it back to his new bank account.
So here just for your own edification, I don't know how you're accounting for it or whatever. Make sure that you withhold a little bit of money from that, because you need to charge an actual interest rate, or there will be an issue with your taxes, because loan like that without interest is going to be looked at as if it was some kind of money laundering operation. So just make sure that seriously, and it's nothing you can't correct. Just make sure that he knows that he needs to pay you a reasonable amount of interest. Like, look at prime plus a couple for 2 days or however long it was there, so that you do, I understand and the world understands, but you have to do it right.
Okay.
Right? Those are little things like that.
See, that's why we come in and do the podcast.
Yeah.
But so anyways, that situation was kind of a windfall for us, because when all that stuff was going down, people were looking for a safe place to put money. We had just started our first fund. It was only a $5 million fund, and people with good liquidity that was sitting in a regional bank was like, where's this money going? We're like, well, we're not leveraging the money. We're not going and borrowing more money to buy real estate. We're just buying real estate cash and flipping it. So you come be a part of it. We're going to hold some back as rentals, for depreciation, but I mean, we're going to be flipping real estate with this money.
Yeah. So everybody was looking for, industry term is cash freezer.
Yeah.
Right. It's like, so I know I don't need the money for 6 months. I want it out of the banks. I'm worried about the banks. I want something tangible. By the way, that's the exact reason that people buy gold and oil and what they call tangible assets, is because they don't trust the banks. They don't trust the fiat currency. Right. So they'll go out and buy or put money into a cash freezer, whatever that looks like, whether it's real estate or anything.
Right in the middle of our fundraising, those banks start failing, and made raising capital super easy. So we got that money and we put it into real estate. We've been flipping it. I don't know, we've paid out $250,000. We've raised $4.5 million. We contributed $500,000. So we've paid out $250,000.
Do you have a data room set up?
Do what? What's a dad move?
We're gonna work with you on that.
I don't. But so we've paid out $250,000.